world of currency trading and want to learn more about Forex, in this video, we will take a deep dive into this global marketplace and explore everything you need to know about Forex trading. Okay, so deep introduction. Forex, or foreign exchange trading, is the process of exchanging one currency for another. The Forex market is one of the largest financial markets in the world, with trillions of dollars being traded on a daily basis. Despite its size, however, the Forex market remains relatively unknown to most people. This comprehensive guide will provide you with the detailed information you need to know or understand how Forex trading works. We will start by looking at the basic of Forex trading, including the different type of currency pairs, okay, and exchange rates. Next, we will explore the factors that can influence the Forex market, such as economic indicators, political events, and other external factors. You will learn about the various trading strategy and techniques used to trade, okay, such as technical analysis, fundamental analysis. We will also cover risk management and explain how you can use various tools to minimize your exposure and trading in the Forex market. Finally, we will take a look at some of the most popular Forex trading platforms and brokers and show you how to get started with your own Forex trading account. Okay, so this is what you will learn in this particular tutorial. Okay, Forex trading, and we will dive into currency exchange, technical analysis, risk management, and Forex brokers. So here comes the question: what is Forex trading? Forex trading is the process of exchanging one currency for another. The Forex market operates 24 hours a day, 5 days a week, and is one of the largest financial markets in the world. As I said, unlike traditional stock and bond markets, the Forex market is decentralized, meaning that there is no central exchange and traders buy and sell currency directly with each other. So you can see currency pair, which are here: the euro to the dollar and the British pounds against the US dollar. So currency pairs and exchange rate. In Forex trading, currency are always traded in pairs. The first currency listed is known as the base currency, while the second currency is the quote currency. The exchange rate between the two currencies determines how much of the quote currency is needed to buy 1 unit of the base currency. For example, in the Euro USD currency pair, the exchange rate is the price of 1 euro in US dollar. As you can see from here, at the left hand side is the base currency which started the pair, and the second is the quote currency. So here come the factors that affect the Forex market. There are many external factors that can influence the Forex market, including economic indicators, political events, and other news events. Economic indicators such as interest rates and GDP can have a significant impact on the value of currencies. Political events such as election or change in government policy can also affect the Forex market. Traders use tools such as fundamental analysis to monitor these events and adjust their trading strategy accordingly. So this is the structure of the factors that affect the Forex market. So the head is the news. Everything is all about news. Then we have three sides, which is the economic indicators, other factors, and political events. So under the economic indicator, we have NFP, which are a news released by the US government. We have the CPI news of the countries, and we have the GDP news of countries and interest rate. They all affect the market under economic indicators. So when it comes to other factors, we have war, which is an emergency that can pop up and affect the Forex market. And the last is the political event, and which include the election, change of government. Okay, and these all affect the factors, affect the Forex market. So we come here to learn about trading strategy. So traders use a variety of different strategies when trading Forex. Technical analysis involves using charts and indicators to identify potential trading opportunities. Fundamental analysis involves analyzing economic and political events to make trading decisions. Traders also use risk management techniques such as stop loss orders and position sizing. It's to mitigate potential losses when trading. So below you can see some pattern here, which is the double top pattern, and we have the trend line here, and we also have the channel. So you can use many of them as your strategy to trade the Forex market and become profitable. So choosing a Forex broker. Okay, there are many Forex brokers to choose from when opening a trading account. Traders should look for a broker that offers competitive spreads, reliable trade execution, and users friendly trading platform. Okay, it's also important to choose a regulated broker that provide transparency and security for traders fun. Okay, so if you want my recommended broker to trade with, I will leave a link to that broker in the video description to use. So now that you have a better understanding of forex trading, you can take the necessary steps to open your own trading account and start trading currency. Remember to always practice risk management and choose a reliable broker to ensure a safe and enjoyable trading experience. Thank you for watching and happy trading. And don't forget to subscribe and practice more. Use my recommended broker to trade these financial markets. Goodbye.